Oh, so it's Saturday night. Hopefully you can hear me. And it's very quiet. Finally, everybody went to bed. And I want to tell you how my week's been. It's been crazy. If you are a mortgage loan officer and you are in these crazy real estate times, then you most likely will understand what I'm talking about. For the people that don't know me, my name is Isaac.Duenas. I'm a mortgage loan officer located just outside of Cleveland, Ohio, in our Independence branch. And tonight, I'm going to talk to you about several things. Number one, we're going to talk about the market these days. What is going to happen? Why are interest rates going up? And is there any hope for the future? Number two, I'm going to share with you a little bit of the excitement and frustrations of these days with the market as a mortgage loan officer. Number three, today I got into a contract. Somebody accepted my offer for a home, so we're going to be moving. Yes, I am buying a home in this crazy, super high, overpriced market. That's how crazy things are. Anyway, so let's start. Number one, as you already know, I think that the market for refinances it's over. And if you're in the lending industry, you know what I'm talking about. I mean, I can tell you this: I pulled lots of credits this week, and people, people are very interesting. So they are already at 3%, 3.25%, 2.875, 2.5, and they want to refinance now. Let me tell you something. Interest rates are like the stock market. They move, go up and down like Forex, like cryptocurrency. They'll go up and down and up and down and up and down. So today you might be up. Sorry, my throat has some issues. So the market might be up today, which means that interest rates might be actually good, So that's great. But tomorrow they might be down, which means that they're bad. But sort of. The changes are not very significant. They are very small. And so one day they're up, one day they're down, one day they're up, one day they're down, up, down, 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 up, down, down. You know what I mean? So in a way, you have like a line of an average interest rate. So when people call me and they say, what's the interest rate? Well, what do you mean? Like, what's your credit score, public records, payment history, equity in your home? I mean, there's just several factors. You don't have a specific rate because it's constantly changing. Plus, each rate has a price that you gotta pay for it, or you gotta get a credit to be able to get it. Does that make sense? All right, so if normally you're dealing with a market that goes up and down, up and down, up and down, let's just say that for the past week, the market has been down. The next day, instead of going up, it's been down. Instead of going up, the next day it's been down. 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 Let me put it to you this way. If the market continues behaving like this for the next 2 weeks, if we keep going down at this rate within the next 2 weeks, we will be in huge trouble. What I mean with that is the drop is very significant. It's very bad. We should not be the interest rate should not be going up in such a fast pace. I mean, I understand that the market will change. According to the Feds, they will stop playing to be God with the market. But these changes are being very radical, and they're happening now. There's no small transition. No, they're just literally, interest rates are literally climbing up, climbing up, climbing up. What that means that if you have a home and you already have an okay interest rate, just you shouldn't refinance. I mean, there won't be a point. Why? You probably have a better deal, especially if you were shopping a year ago or 6 months ago. You're gonna get a better deal than the one that you can get now. I hope this makes sense. So that means that for a lender, now this is the purchase market. It means it's a lot easier to get leads towards people that want to buy a new home instead of getting leads for people that want to refinance, lower their payment, lower their interest rate. This is definitely a cash out market. People that have equity and want to take cash for a specific purpose. It could be to pay off credit cards, to buy a car, to start a business, for whatever reason. That is the market that we're dealing with. So if you're really looking to rate and term, I mean, unless you're in a super high interest rate like 8-9% manufactured home and you're trying to go down to 4%, the world has changed. Now here's the situation is, when interest rates go up, by logic and common sense, homes should go down in value. Why? Well, first of all, because people are losing buying power. Does that make sense? So before they were able to purchase a $600,000 home, well, now because the rates are going up, they might be able to purchase only a $500,000 home, $400,000 home. So all of a sudden, homes that are priced high, $500,000 homes, even $400,000 homes, you're going to have less people that qualify for those homes. Therefore, less offers. Therefore, less homes being sold, inventory sitting and staying there longer. And people would have to drop down their prices to be able to get the market moving. In theory, that's what it should happen. But is that really happening now? No, what I'm seeing is, so far, nothing's stopping. I mean, there's states like, I'm going to say the first one that comes to my mind is Utah, that the homes get on the market, they don't even hit the market and they're already sold. That's how crazy and wacko this market is. So if interest rate keeps going up and the supply and demand keeps going up, what I mean is that homes keep being sold at this speed, who knows what's going to happen? I have no idea. But the only thing I know is that interest rates should not be changing that radical. And they are. I mean, you can, I don't know, blame Joe Biden, the virus, the hyperinflation, whatever you want to blame it to. The thing is, the reality is that this economy is here now. I don't know what's going to happen. All I can tell you is, if you're looking to buy a home and you found a home that you like, I would make a move now. Like, we don't really know what's going to happen in the future. Like, I literally don't know. I mean, interest rates are getting pretty bad. I mean, I don't know. Anyway, what's your opinion? What are your thoughts about it? What do you see in your industry outside of the real estate? Do you see that, is this affecting your retail business, your e-commerce business, are you a realtor? Are you seeing any difference on the market these days? Are you a loan officer? And if you are, where are you at? Where are you located at? How is your market going? In my opinion, as a lender, we will need to learn to adjust and move towards different kinds of mortgages and loans. Otherwise life will be tough. I'm gonna finish the video right here now. Sorry, we said that we're gonna talk about a few things. The second thing is, I'm buying a home, and which is exciting. I wasn't planning to it, but I think that, like everything in life, sometimes you don't plan for some important decisions that you make. Like, sometimes you find the love of your life, and what are you gonna do? Wait? Or get together, create a family, that kind of stuff. There's some things out there that, like, you don't really plan. It just kind of happens, if that makes sense. And you gotta make some tough decisions in those moments. And I think that a home is one of those. I mean, if you have, especially if you have a big family, I understand that prices are through the roof, but what are you gonna do? Wait for them to go down? You might be waiting for another decade for the prices to go down. Who knows? Anyway, thank you for watching. I hope you guys have a great day. See you, bye.